Hello, everyone. Welcome to today's event. We'd like to have about 10 people on the call, 10 to 15 before we start. So please, you can grab a bottle of water or you can grab a bottle of champagne or wine while you just wait for us to start this beautiful and amazing event. Welcome to the Thrive event. Today, this is Thriving Not Surviving Canada 9.0. The Thrive community is that community that wants everyone to thrive in Canada. For someone, you might say it's almost impossible, but there's possibility in knowledge, there's possibility in sharing, and there's possibility when we want everyone to thrive. The little quota that you do would help every other person in the community thrive. If you want to live in isolation, at the end of the day, what happens to the generation that are coming on board? And for Thrive, is about 360 thriving, not just thriving in one aspect of your life, it's thriving in every aspect of your life. That is what Thrive stands for. Our last event was about children, and I cannot, kid me not, we've had a lot of people come back to say how their children have been transformed, how their academics, even their attitude, their behaviors have been transformed by that singular event that we had the amazing Dr. Tracy. She's also on the call today, and Kiki Okikiola help us dissect how to help our kids prepare for Ivy League school. Now, for today's event is about investment. How do you invest in your future? And investment is broken down into different aspects. And at times we think investment is only the stocks, the fixed income, the treasury bills, but it's beyond that. You have to secure your future. How do you secure it? And we've had people that understand the way it works in Canada, because Canada is very different from where we are coming from. And for most people on the call today are Nigerians. The way things are done back home is different from how things are done here. And we understand that there's something called life insurance, which I'm very familiar with, which I had while I was in Nigeria, which my husband had. I'm used to it. But we have other types of investments. Imagine in Canada, when you invest for your child's education, it's somehow you're getting tax back. Somehow you're getting some benefits. When you have your life insurance, you can be paid even while alive. It's not about when you're dead, and so many other investments. So this is like part one of our investment series, because there are so many investments, and we knew that taking you only today will be too much on everything. But one thing I can assure you is that when Thrive searches for people to speak to you, we look for authentic people, not people that will be gatekeepers. We don't do them here. We have people that will come and shed light on exactly the way it is. Our tax events, every other event that we've had great testimonies from it. So today we'll be starting with Edu is a surgeon. And he's also a financial advisor right now in Canada. He's an oral and maxillofacial surgeon and also an independent financial advisor. He's passionate about immigrants securing their future with tailor-suit investment, especially in insurance. It brings the same precision of being a surgeon into the financial space. But when a surgeon now decides to be a financial expert, you know that there is precision. You know that there's a lot of intelligence that goes into it. You know that he has broken down everything, possibly the pros and cons. He knows it before bringing it to you. So I'm going to be leaving the floor for Mr. Chiedu to take it over from me. Please, we can clap. Online clapping.
Thank you very much for that robust introduction. Somebody's raising his hand. Okay, somebody just clapped.
Oh, okay.
That's awesome. Okay, thank you very much for that robust introduction. And first and foremost, I want to appreciate you for the privilege given to us to talk. In as much as we try to reach out to immigrants, we need a forum like this in order to disseminate our information, okay? As a team, we are very grateful to having us here today, and we hope and we trust God that at the end of this presentation, we'll go home happy. We'll see a different perspective of investment, because we've all come here to make money. We've all come here to do good, and that's our prayer. Thank you once again. Before I move ahead, we work as a team. I want to briefly introduce my team members. Dr. Baz. But Dr. Baz has had a Bachelor of Dental Surgery in University of Benin in 2007. 2007, of course, he started his residency almost immediately, and he became the chief resident after a successful Part 1 program, and he got his fellow West African College of Surgeons in 2017, which was awesome. Outside that, he was the head of department, the dental and maxillofacial unit in Federal Medical Center in Egua, where it worked for a period of time before relocating to Canada. In Canada, he has been up and doing, and he just got his DDS, meaning that he's fully licensed to practice in Canada. And presently, he works with Sedona Dental in Calgary, and of course, in London Square Dental Clinic, all in Calgary, Alberta. Dr. Bass was licensed in 2022 as a life insurance agent, and he has rose to the position of Executive Vice President of Greatway Financial Incorporation. Dr. Bass, you're welcome.
Thank you so much.
You're welcome, Dr. Bass.
I've gone the other way around, but it's all good.
Yes.
Dr. Kennedy Omanudowo is also a doctor, position of Senior Vice President in Greatway Financial Incorporation. So I must tell you that these men are doing gorgeous. Dr. Bass will take the presentation while we do our support from the other side. Thank you.
Okay.
Thank you for I can't share yet. I'm going to need some permission to share.
Oh, okay. Let me see.
Yomade and everyone else in the house for this opportunity to share the little I know with you guys. Thank you, Benz, for inviting me to do this presentation. In Greatway, we are a team. We are constantly working to educate Canadians. Our first focus is our community, which is the community of immigrants, because we know the least of how things work around this culture. And it's very important that we know how it works so that we can be sure of our future. Ironically, of all immigrant nations in Canada, I've come to find out that Nigeria as a country is the worst hit nation, because majority of Nigerians who left Nigeria already made it before they left. They made it in one form or the other, in their careers, in their business. It is the cream that left. Unlike most other immigrant nations, those who struggle, they leave. So when we come here, because we are achievers, we still want to achieve. But we need information to be able to do it the right way. Because if we do it the way we do it in Nigeria, we'll probably not get the results we're expecting to get. So today, I'll take a few minutes to look at how we can secure our financial future in this country. And the aspects of retirement, income, wealth creation, and life insurance will be touched. I can pause for questions in between if you want to ask a question, or you just drop it in the chat box. Okay. So we're going to understand how this works. We'll look at the principles, the role of life insurance in achieving the goal of financial freedom, and how we can integrate all of these together. Now, in Canada, 76% of people will live beyond the age of 65. That's a very high life expectancy. Unlike Nigeria, where we have about 40% or 41% for males. So it means that most of us here will be alive and see our retirement years. Health is good, security is better, so life expectancy is more. And unfortunately, only a small percentage of Canadians are financially secure in that retirement years. That's why you see people taking shifts at Walmart and they are old. It's not because they love to work so much. It's because they just realized they didn't plan properly. They thought they were running the race, got to the finish line, found out that that's just the beginning. So how do we survive? They have to depend on government benefits and still take some shifts. And I know most Nigerians don't want to be there because that's not how we started off before we came here. Now, How do Canadians earn? Do Canadians earn a lot of money? How, how is the earning power of Canadian homes? You will see from this chart, I don't know if you are using a computer, it may be easier to see. Only 22% of Canadians earn over 100K per annum. Only 22% of Canadians, half of Canadians earn less than 45K every year. And that's very shocking. This just breaks it down. Now, these are percentiles, actually not percentages. Now, if you look at the 50th percentile, it's $46,000. It means that 50% of Canadians earn above and 50% earn below. Let's go to the 10th percentile. Only 10% of Canadian households, now, this is a combined income, earn over 125. 90% of Canadians earn less than 125. This is before tax income. How does that make sense when you now compare the expenditure that households are going to incur in reality? I spoke to one of my friends recently. I realized that he did not know how much his household expenditure was. I don't know how many people are like that. You know? Give me a sec. Oh, okay. Can you still hear me? I think my video went off for some reason. I don't know.
Yeah, we can
Okay.
hear you.
Okay. All right. So, okay. So, with the amount of expenditure that households need to incur to survive, as of 2021, the average household would need $92,500 to survive. But remember that only 22% of Canadians will earn $100,000. So there's a big discrepancy in income versus expenditure. If that's the situation, how then do we create wealth? How do we cope? How do we save money? Because the expenditure will not reduce, it's only gonna increase. Everyone here, if you're an employee, you're familiar with CPP. If there's anyone who doesn't know CPP, he's a business owner. Because from your paycheck every month, CPP is deducted. And I hope, for God's sake, nobody is hoping that CPP will take care of him or her in retirement. You don't trust anything, you trust this page, the source of this page. This is the Government of Canada website. How much CPP do you think you can earn? If you start your retirement at 65, the maximum is 1,400. You are muted, Yomade. I can't hear you.
Sorry, Doc. I just wanted to say that what can you see? I want to be sure that the presentation is big enough for
It's
people.
running?
No,
Okay.
it's running, but is it? Sorry, please, people, can you confirm anybody that you can see that the presentation is large and you can see what is presenting to us?
For my
Yes.
hand, I can see it clearly.
Oh, thank you
Yeah,
so
it's
much.
large. It's
Thank you
large.
so
Okay.
much. Thank you.
Okay. All right. Thank you for, yeah, that's very important thing to know. So they just keep running and think that it's going on right? So it's about 1,465. That's the maximum. Remember, you and I don't fall into that category of those who earn the maximum, right? The average CPP payout is $800. You and I are not in that range of average because we are talking about people who started contributing since they've been 18 years of age. Most of us came here adults with children, maybe. So we will probably earn less than that. But even if you are going to get 1,400 a month in retirement, do you think that 1,400 will take you to Walmart in the next 20 years? I came to Canada in 2019. I know how the 8-kilogram bag of rice moved from $8 to $18 in Alberta. I don't know if it's cheaper in BC, right? So things can really go out of hand and CPP won't do anything for you. What then do you need to start thinking about? For either of us To be financially secure in our retirement, we need to put our hands in these three things. Everyone's already on CPP, except me and any other person who's a business owner. I'm not on CPP. Okay? But you do need to own a home. And then you do need to have your retirement investment. You have to be very deliberate about it. If you break one leg of this tripod, you probably struggle, or you have to create another leg somewhere in any other form. I know everybody wants to be green. So we do want to know, how do we do this? For those of us who are already saving money towards our retirement, how's your savings going? What's the rate of return on your savings? Are you keeping it in the bank? We used to keep money in the bank in Nigeria. I don't have money in my bank account. Because I'm like, why do I need to put money in the bank and keep it in the bank? If you are looking for emergency funds, there are channels where you can put that money and still be able to access it as if it was a bank, right? But let's see the difference in knowing or not knowing the rate of return on your investment when you keep it somewhere. Now, this is a scenario of a person who has kept $10,000 in an investment portfolio. Portfolio A would give him 4% per annum. B would give him 6% per annum. And C would give him 8% per annum return. Now, the rule of 72 helps us to know, how does this money behave? It will double based on 72 divided by the rate of return. So if it's 4%, 72 divided by 4 is 18. That money will double every 18 years. At 6%, 72 divided by 6 will be 12. The money will double every 12 years. And in the case of the 8%, it will double every 9 years. Now, look, 4, 6, 8 appears very close. But can you see the discrepancy? Within the same time frame of 36 years, 10K can either be 40K or 160K, depending on where you have put that money, how you have put it. So I know lots of people have money in RRSP. They don't know how that money is performing. People put money in TFSA. They don't know how it's performing. People have money in their bank accounts. They don't know how it's performing. If you're thinking of the retirement, you need to know how this is performing. Second thing, do you want to pay tax in your retirement? Is it possible to avoid tax, not evade? Evasion is a crime, but you can avoid tax depending on which vehicle you have put your money in. There are vehicles that are 100% taxable. RRSP is top on that list. And that's why the government loves RRSP so much. They preach it everywhere. You know, there are vehicles that are 50% taxable. And there are vehicles that have no tax at all. I'm not going to tell you which one to do, but let's do a comparison of these various vehicles. Now, in Canada, there are just these 4 broad headings of how you can invest for your retirement. RRSP, TFSA, non-registered investments, and cash value from life insurance. Now, if you look at the limit of contribution for RRSP, it's 18% of your income. That's how far you can go per annum. For TFSA, it's now $7,000. I think 7,200. I don't know. Non-registered investments talks about stocks, shares, and all of that you can buy. Government also wants you to put money there because they're going to tax everything on that money. And then the cash value from life insurance. These are all in the government financial toolkit. It's not the creation of Greatway Financial or Dr. Chedu Benz. Okay, what about tax deductibility? Tax deductible means that if I pay some money into this investment, that amount of money will be deducted from my actual income before the rest of it will be taxed. That's what it means for a contribution to be tax deductible. Only RRSP is tax deductible for a reason. The other investment vehicles don't save you on taxes today. That's not entirely a bad thing. If there's any Igbo man here, he will easily understand this. If I give you 100K and say, pay me 20% tax today, go and invest your $80,000. Or take the 100K invest it, I'll come back in 20 years and take 20% from you. Which one will you do? My Igbo friends should take second option because then they settled you. The money is theirs, they grow it their own way. But RRSP does the opposite. It keeps you away from tax today and taxes you on everything else as you withdraw in future. What about the growth of the money? Everything will grow tax-free except non-registered investments. When you want to withdraw your money, RRSP comes back to take their taxes. But TFSA and cash value from life insurance already sorted out. You should be fine with those. Government benefits, I like not to talk about this a lot, but I explain. So if you receive child care benefits, you get the maximum. The poorer you are, I don't mean it in that sense, but the poorer you are, the more child care benefits you get. The richer you become, the less tax child care benefits you get. Every Nigerian will lose child care benefits. I've not seen one that is not going to lose it. In the first 3 years, most Nigerians have lost 50%. They are working hard, doing 2 jobs, and doing all that kinds of stuff. It's the same vein in your old age. If you are not a poor old man, you will not get the government benefits. So I don't talk about government benefits in Nigerian forums. I just leave it out. But if you ask me about it later, I'll talk about it. Okay? How much money do you need in retirement? I would love to retire before 65. And that's my goal. Okay? If you retire at 65 and you're going to stay alive for another 20 years, you need about $1.5 million to just live jeje. People are going to say, why do I need that much? Now, have you ever thought about it? Your bills will not end, it will only increase. For instance, if you own a home, you pay property tax on that home for life. You will change your car every 5 years for life. You will pay car insurance for life. You will still go on vacation. If you do one vacation, that's a moderate lifestyle. So you don't need money, and we're factoring in inflation. Okay? If you live till 95, you need way more than that. So, how do we achieve this? We need to start planning towards it. How much do you need to have in your retirement savings for you to be able to maintain the lifestyle you want? If you're looking at living on 30K per year, you should have over 500K in your retirement savings. Please, how many people, you can show it by raising of hand on the forum, can save 50,000 a year? Save 50K. So it won't work on savings. It has to be an investment. The money you have has to be bringing money for you to meet these figures. What about our children? I like when the anchor talked about raising children as one of the things you guys have learned. If you have raised your children well, you also want to bless them. The Bible says that good parents will leave inheritance for their children. It gives them a cutting edge. I went back to school in the US. I owe $500,000 in student loan. We've been lied to that education is free in Canada, but if you are getting any good education, it's not free. It's very expensive. So for our children, for our grandchildren, our children probably won't need much money from us because they're walking the tightrope with us right now. What about their grandkids? Do we want them to struggle the same way we did? How do you save 500K to give your children? And I always use this as an example. When we were in Nigeria, if you have 2 children, an average Nigerian man is thinking of building 2 houses by default. If he has 3, in his mind, he wants to have 3 houses at least. If you come to Canada, your one house, you are still owing more than 40% of the mortgage. You pay over the next 10 to 15 years. So at what point are you going to buy 3 houses for these 3 children? But you can still do that if you use tools like your life insurance to transfer that wealth. What life insurance can do for you if you structure it properly, it can protect your family today and still give you income in your retirement tomorrow. because some life insurance products have investment components in them. For those of you who are following so far, you might want to scan this because there's, like she said, we will not be able to exhaust everything today. Dr. Benz is skilled at tailor-suit products for you. If you scan this, you'll be able to get your information and then follow up with you. If you plant your seed early.
Okay, I think you need to still leave it for a while. So please,
Okay.
people, please, can you scan this barcode so that you can get through to this, to their community? It's a group of organization. You called it Gate. I'm sorry, I can't remember.
Great way.
Great way. So in case you need to ask them follow-up questions or register with them, please scan. We'll also show it at the end of the event. All right, we can go ahead.
Thank you so much. Yeah. So when you sow your seeds, they and you nurture them, they will grow. When they grow, you will harvest. And when you eat the fruit and plant another seed, you get another tree and you continue to harvest. So being deliberate is very key. It's not expensive to invest in that future that we're talking about. It can actually be very cheap. Some people go to Tim Hortons every day, spend $6, $7. Tim Hortons daily. Can you sacrifice your $7 Tim Hortons every day to plan towards your retirement? I know the answer is yes. And would you protect your family? The answer is yes. Why is life insurance very important? Apart from the long-term benefits we are talking about, the short-term, I'm a doctor. I've seen things, I still see things. And I know that it's very important that we have short-term plans because only God knows tomorrow, right? If you connect with us, you should be able to do your financial needs analysis, look at your budget, look at your needs, your goals. How much risk can you tolerate? We'll recommend solutions that are personified and not just a generic thing. Before I go, I'm rounding up already. It's important for us to go home with these. Whatever job you are doing is for you. Your family cannot inherit the job unless you own a business. Another thing is that time is money. Best time to start is now. You know, our financial needs will increase. I mentioned that inflation will continue to grow. The cost of living will continue to go higher. Investment is not as expensive. When we talk about investment, most of us would think about something big. I need to get 5,000, 10,000. No, it's as small as $7, $10, $20, whatever you can afford. Starting now is important. If you have information and keep it to yourself, it is not useful at all. What you do with the information that you get is very key. There might be people here who also want to learn how to share this kind of information we're doing. That you can also talk to Dr. Benz about, and he will surely guide you through how to get hooked up and also help lots of people. The QR code is back on, and then we can possibly take some questions now.
Okay, sorry about that. Does anyone have a question? I'm sure are you the only one speaking today?
Yes.
Okay, so because I told Mr. Chedu that I would also like there to be breakdown of people understanding, how you can be paid for your life insurance while you're alive.
Okay, sure.
So because we know that this topic was extensive, we actually told the second group not to show up for today. So we would like you to take the 1 hour and break it down, because those are the things. Because before someone will say, oh, I want to go ahead and have a life insurance, if they understand the nitty-gritty compared to what they've seen online, the buzz they've seen on Instagram, things that they've come in contact with, and they understand that, oh, there's another side to it, I can be paid while I'm alive, oh, I would like to do this life insurance, you know. So, and if there's any other products that you like to talk about, we have till 6 o'clock. Let's be able to dissect it instead of us stopping halfway.
Okay, so let's talk about how you can get paid from your life insurance. So in Canada, and that's the beauty of it, we can trust these things because they are backed up by legislation and law. There are 3 forms of life insurance in Canada, just 3. We can color it in any form or any way we can, but it's going to be still those 3. One is a term insurance. One of them is a universal life, and one is a whole life. You know what? I'm going to just share you another. I'm going to share you another document here, okay? That so that I can carry you along at the same time. Give me a sec.
Are you there?
Yeah, I'm right here. I'm just pulling up another document here. Yeah. Okay, let's share this one. Okay. Okay, let me start it from here. Why do we need life insurance? In Canada, it's very easy to owe. I don't think there's anybody that won't owe. When we bring our children here, we create a lifestyle based on the income we have. We all buy houses and keep the mortgage running. And we are planning to save some money while we are alive to help our children and care for them. I hope we all understand that when they talk about income, it's always a household. Why is it household? It's difficult for one person to run the job, make the income, and take care of everybody. Even if your partner doesn't go to work, it's saving you a lot of costs caring for the children while you go to work, and vice versa. So these are the things, these are the factors we put in when we start thinking life insurance. How much life insurance do I need? Do I even need life insurance? Because if anything happens to one partner, life becomes very difficult for the other. If there's emotional problem and there's also financial problem, that's a double jeopardy. If I was going to run a life insurance for a family, I'll be looking at how many kids do they have? Do they own a home? Do they owe on that? How much income do they have? When I put all that together, I'll be able to come up with how much insurance they have. This is what we call the financial needs analysis. It's always the first step. We want to know this before we decide. Some of you may have life insurance from your workplace already. If you do have, I will deduct that from your total insurance needs, and then we see what you need. Once we know what you need, we're going to come back and look at what kinds of policies are there. Which one will suit you? How does your budget fit in? There's just these 3: term, whole life, and universal life. Now let's break them down. Term insurance only offers you temporary coverage. Now, if you have life insurance from your workplace, you probably have a term insurance. If you have insurance from your workplace, you probably don't have enough coverage. Most of them will give you a percentage of your annual income. If you earn 100K, you probably have $10,000 life insurance. Does anybody know how much it costs to bury a person in Canada? At least I know in Calgary, Alberta, it's about $30,000. If you know, what's it like in BC, Yomade?
Trying to unmute. Can you hear me now?
Yes, I can hear you now.
Yeah, so in BC, for the few I've seen, I don't know, I've not been, I'm not going to bury anyone soon. But for people that we've seen, that we've raised money for in the past, that people, you know, just ask for funds for this, is like around $20,000. So I don't know what it covers, but that's what we've seen.
So thank you so much for that information. So I hear when you say we raised money. This happened so often, right? Because there was no life insurance. Imagine a person passes on and leaves that burden for the children that are struggling, How many people have $20,000 in their bank account? If it was there, we won't be doing GoFundMe. You know, it looks small, but it's so big. There's no urgent $10 in Canada. In Nigeria, there's urgent 100K. Now it's urgent 100K. They've moved beyond 5K. You know, but back to what I'm saying, term gives you a temporary coverage for a period. Usually the max is about 30 years of cover that you have on the term insurance. But whole life and universal life will offer you permanent coverage, which means that you have that life insurance for life. So let's give it and give some life to it. A person buys life insurance, a 20-year term is 45 years old. It means that at age 65, his life insurance has expired. If that person stays alive, which he will likely do, because 76% of Canadians will stay beyond 65, live beyond 65, right? That person doesn't have life insurance. If he dies at age 66, the family will cough out that money for life insurance. So, but if he has a permanent insurance, that will continue to run till age 100. Now, this is the one that gives you money, cash value. Only universal life and whole life can grow a cash value in the policy. And that's because when you pay your premiums monthly, a major chunk of that of the premiums will be put into your investments. So you're paying for life insurance, but you're actually investing within a tax shelter. Okay. Now, because you are investing money, that money has the potential to grow. Where do you typically invest this money? Most of my clients have their monies in S&P 500, TSX 60, NASDAQ. Okay, these are time tested. Now, if you look at the trajectory of the S&P 500, there's a 100 years record of S&P 500 now. It has always been an upward growth. Every time the S&P 500 went down, it bounced back beyond where it went down from. Even the most recent one Trump did. You know, two of my clients called me, man, I saw my cash value, I had a loss in March and April, and they called me May and June. All that loss has been eroded. It didn't matter anything. It bounced back even too fast, right? In COVID, that happened, and it bounced back. So if you look at the history, you see that, okay, this is always going to work. However, it is only in universal life that you can decide where your investment is going. Okay? So I'm not even talking term anymore because term is not offering me anything anymore. Whole life, once you put your money in, you're locked in. You cannot change it. But in universal life, you can decide that, okay, I want to put some of that money in GICs. You know, GICs are guaranteed income certificates. These ones will return maybe 2-3% per annum because it's low risk and high guarantee. So if you have so much money already, by the time you've grown your retirement funds, you can decide to say, okay, let's pull out 60% of this money, put in a GIC, so that I don't suffer any loss. I'm too old to be taking market vulnerabilities, right? But you do want to grow the money first. How about the premiums that you pay? It's guaranteed in the term insurance and whole life. So when we say guaranteed premiums, in universal life, you can increase, decrease, pause your premiums. So you started a policy with Benz next week. And then after 6 months, you realize that you want to buy a house and you need to pull some money together. Okay, Benz, this period, the gas hand big. Let me pause for 3 months. It's only in universal life you can do that. You can't do it in whole life. If you pause your whole life policy, you lose it in 1 month. So this is the law. This is how it's all structured. Terms, same thing. Okay? What's about flexibility? Of course, we already said that UL has that flexibility. What does it cost you to invest in a whole life or universal life or term? It's pretty higher for the permanent insurance. And I'm sure for obvious reasons that should explain itself than the term insurance. So which one is the one that will work for you? It can be whole life, it can be universal life, it can be a mixture of all of these. Now, I'm going to run you an illustration. Oh, someone is raising his hand.
Okay.
Abby?
Yeah, sorry, sir. When you talked about your ability to like pause your insurance
Mhm,
because you needed to do something. On the
mhm,
table, what was
mhm.
checked is it's not the universal. So I'm not sure what is there is guaranteed premium. And that's when you were explaining ability to like pause if you needed to do something else. But you can see it's all life insurance that is checked on that table. So that's where I got
Mhm.
confused.
Okay, so let me explain that again. So when we say guaranteed premiums, the premium you start with is what it is from day one, cannot be changed. Okay, for your term and your whole life.
Okay.
For your universal life, it can be changed. So let's say you're doing so. Okay, first of all, okay, I think I skipped this part. The cost of insurance. There's what we call cost of pure insurance. Okay, when you do a term insurance, you are paying just the cost of pure insurance. Okay, for whole life and universal life, you are paying the cost of pure insurance plus an investment component. So your premiums are higher for that reason. Every year, as you get older, your cost of insurance is increasing.
Mhm.
Okay, for whole life, they already factored in all that increase, and they tell you the premium today. So, for instance, you're buying a $1 million policy. If you buy it as a term insurance, let's say it's $100. If it's a universal life, it's probably going to be $400. If it's a whole life, it's probably going to be $1,000. Okay, it's $1,000 because they've given you the guarantees of the premium. Your cost of insurance doesn't change. In the universal life, it will change, but your premium that you pay a month, you choose how you're going to do it. Do you want to increase it with your cost of insurance? Do you want to decrease it when things are rough? Do you want to keep it steady? It's on you. And it is you and your financial advisor continually reviewing that policy, okay, to decide what kind of changes you want to make or not. Now, when your premium is first calculated, it has already factored in all that increase. But if you need more money from your policy, you can decide to increase that premium. If you need more money from your whole life, there's nothing you can do. You buy another whole life. Don't know if it makes sense. Is that bit still there?
Yeah.
Yeah. So, and then that also explains again how flexible the UL can be versus the whole life. So you can pretty much do a lot of changes on your universal life. We good with that?
Yes, we
And
are.
then, yeah, and then I talked about the possibility of taking some whole life, some UL, some perm. Just all now depends on everybody. Everyone's different. The situations are different from everybody. If something happens in the short term, then the family gets paid. But if nothing happens in the short term, you do want to get a payout from your life insurance. Now, how do you get the money from your life insurance? If you have grown money in your life insurance, which means you have either bought a UL or a whole life, then there are three ways to take money from your policy. Number one is a direct withdrawal from your policy. Now, when you take money from your policy, that is income to you. And if it is income to you, it is liable to taxation. Okay? Now, you can decide to take it as a policy loan. A policy loan will be given to you by the insurance company if you want. Now, when you take a policy loan, do you pay tax on loans? The answer is no. And this is where I struggle with my community because everybody has a house in Nigeria and they are not owing ₦1 on that house. So we don't even know how to borrow. But borrowing is the way forward when you are here. Now, you take a policy loan. What's the interest rate? For instance, my current life insurance policy, if I'm going to take a policy loan on my contract, is 3.9%. Is that a good rate or not? I just want somebody to say yes or no.
That's a fantastic rate.
It's a fantastic rate, right? On a policy loan. Now, the only snag with the policy loan is that if I take $100,000 as a policy loan, the face amount of my life insurance will reduce by 100,000. Now, if I'm using that life insurance as my retirement, do I really care about reducing the face amount by 100K? No, maybe not much, unless my policy is 300K, then I'm like, okay, I'm trying to leave an inheritance for my children. I don't want to reduce that. But you do take that money as a loan. You can use it if you have that much as a down payment for another house if you want. And you have 15 years to pay back that money to the policy or forfeit that portion of your face amount. So let's say by the time I'm 60, my son is now a surgeon too. And the other girl is flying planes. And then the other one is playing soccer. Do I still need a million or $2 million inheritance for them? Maybe not, right? Things have changed. Okay, I don't mind. I'll go draw out from my policy. Unless you have a permanent insurance, you can't be talking that. Another way, which is the best way actually, is to collateralize the value of your policy with the banks. The banks are better than the insurance company. The snag, so I'm quick to tell you the snag, but this is how I talk to my patients in clinic. The snag is that you should have a good credit record. Okay? Because the banks will look at your credit record. If your credit record is good, they'll give you. How do the billionaires do it? That's what they do. They borrow, they invest, they die, transfer the wealth to their family. They don't sell anything. Okay? That's it. You build the portfolio, you borrow against the value. They're not going to sell their houses to go and invest in another place. No. They just walk into the bank and borrow against that value. And the more you borrow, the less your interest rate becomes. I went to RBC the other day and they are chasing me with 300K. I didn't ask them. When I wanted to go to school, I went to them. They chased me out pretty much. They didn't want to hear. Now they're asking me, I want to give you 300K line of credit. I don't want it. But that's how it is. When you start building portfolio, you start getting better rates. Okay? So collateralizing the cash value of your policy is the third option. When you do that and take that money into an annuity, it's still a loan you took. You still don't pay taxes on the loans. Now, when we do a policy with you, we are trying to determine if you decide to take X amount every year for the rest of your life, will your policy still be viable? Because your premiums are usually paid over 20 years and that's it. You don't get to pay anymore for the rest of life. So we factor in the fact that you don't get to pay premiums, the cost of insurance will change, and then you want to take money, because when you take the money from the bank, you don't get to pay the interest, right? The interest is just going to accumulate. But your money in S&P 500 is still growing. I have to determine that if this client dies at 90, do I have enough cash value to pay back what he has borrowed to sustain lifestyle for the past 25 years? The answer has to be a yes for me to be able to sell that policy to you. Okay? So once we factor all of that in, then we come up with the figures. It's tailored. It's never the same figure for two people. Depending on how much policy you've bought, how much you are investing in it, how much time you have to invest, then we'll be able to come up with specific figures. I don't know if I've been able to explain that to a reasonable extent. I mean, we can go on and on, right? But if it's making some sense, then I'll be happy with that.
Okay, Doc. What I would like to say at this junction is that one thing I've taken away from this is that we all know that Canada is a debt economy. It's a debt economy because it's not about cash. You having cash doesn't make you rich. For crying out loud, if you have your credit cards, there are some credit cards that you have that when you use them to pay for most of the things you do, you are traveling on like quarter of that amount whenever you are traveling. For some credit cards, you are even traveling in and being elevated to business class because you have that credit card without you paying for your business class. And these are some of the things people don't know, because I am in the financial industry. I know this. And I also really subscribe to insurance. But what I want to say is that if everybody is selling insurance, life insurance in Canada, and everybody is saying the same thing, what do you want to say differently to the people of Thrive that will make them wake up tomorrow morning or even decide this night that I want to open a life insurance? I know because like you said, and I'm going to like to correct something. You were saying that for organizations, they get percentage of their income. It's not all organizations. There are some organizations that you can get ×2, ×3. That means, for instance, I'm earning 150,000 hypothetically, I can decide to get 450,000. But the difference is, by the time I drop my bag and say I'm moving from this company. Sorry, are you with us?
I'm with you.
Okay, so if I decide that maybe next year, in 2 years' time, I say, oh, I'm leaving this company and I'm going to another company, immediately that insurance might cease to exist. And I will not talk for all companies, because I know that there might be companies that might have something in place that there might be a rollover, but for some that are existing, that is what happens. So there are different types. And because you are speaking to different types of people on this platform, people are working in tech, people are working in science, people are working in education, and they all have different insurance, and their company has insurance for them. While we have those that the company will say, oh, I'm giving you 10% as your life insurance, we have people that the company will decide. For me in particular, I will decide to choose if I want ×2 of my annual income, ×3 of my annual income. I think it's to a maximum of ×4 or 5. I'm not sure. And there will be deductible in my account for this, right? And I've also seen people that, okay, they've said that they can even move that insurance, right, from, when they leave the organization. So now, if somebody wants to open an insurance today, what does Gateway have to say? Because I'm not sure if I got the aspect of paying you while you're alive very well. I think the only part I got there was that I can take a chunk of my life insurance and use it, as a deposit for a house, right? To not just the house, so maybe I want to invest in something, I can use it as the initial deposit. So what else? Like, give us 3, 4, 5 that people will take away today and know, because I know that some people might be doing different things while they are listening to us at this junction, that because of these things, you want to have a life insurance. Though I feel that the number one is that anybody could die anytime. You don't want to leave your partner just like that. Why not have an insurance? That is like the core and the main reason. But tell us others.
Dr. Bass,
yeah, okay.
1 minute, please. Let me just say something before you round it up. Thank you very much again for your wonderful presentation. First and foremost, I try to summarize the benefits. So let's go down. You've spoken like an executive person. They want to hear the layman's language like from us. One interesting thing about this Gateway Financial Incorporation is the retirement component of the life insurance. There is this general belief that life insurance is only beneficial when the person passes on, but that is not it now. Because it's an investment, there is a retirement component of it, that at 67, which is the retirement age for insurance, you start getting your stipends. And you can decide to be getting it monthly or yearly or whatever way you choose it. So there's a retirement component of life insurance. So you're not just doing this, that when you go beyond, people living will get the benefits. So once you live up to 65, you're going to start getting something from the investment you have done. That is one. Two, is the protection plan. You talked about the protection plan. Like all of us, we need to protect our family somehow. If we preach about love, if we preach about peace, there's need for us to protect or have something for our family in case the unexpected happens. And the good thing about universal, again, is the flexibility. It talks about the flexibility nature, that the premium, that it is very flexible. Like if you have a universal life policy and things are just getting a little rough, you could pause. You're not losing anything. Whenever you come back, you start from where you come. Of course, it talks about the higher premium, but again, it gives you that flexibility that, okay, I can't do it for 1 or 2 months. I need to just take a break, and you're not losing anything. Then the last one is the cash value. Gone are the days where when you just invest in life insurance, you lose almost everything. No, there's a cash value component of life insurance that today I said I'm not doing again. I need to log out. You have, of course, you suspend your policy, but you must get your cash value, which of course is being graded as time goes on. So these are just few of the benefits that are very visible. Thank you.
All right. Sorry, Dr. Chiedu, I want to ask you something. When you say they are being graded as time goes on, are you saying that, for instance, if what I've done for the past 5 years, hypothetically, is like $20,000, if I decide that I want out, the cash value will be more than $20,000? Is that what this means?
Come again with that.
Like, for instance, is there anything in the universal policy that I've invested $20,000, maybe in 5 years, maybe maybe I'm donating 200 every month, or I don't know, let's just say $20,000, and I want out. Can I come out of this insurance?
Definitely.
I say I'm not doing, and I want my money.
Definitely.
I'll explain that.
Okay, and will the amount be the same thing?
It depends on how much cash value you have. So remember, you're paying for insurance. Somebody bought insurance and died after 1 week. He bought $1 million. Does he get $1 million to the family? The answer is yes, 100%. Okay, so there's a cost to your insurance. Even if you pay premiums every month, there's a cost. There's a part of that premium that goes into your insurance itself, and the rest is invested. The first 5 years, the insurance company doesn't want you to pull out. Can you pull out? Yes, but you may not get your money. Okay, because that's the risk they've taken. They've taken that risk from you for that period. But after the 5th year, for most policies now, once again, it's not a one size fits all. It depends on how much you're putting into your policy, right? You start to get some money you can take. Mine is less than 5 years. I already have cash in my policy that I can take out if I want to take out. Okay, so if you want to do something like that, always talk to your advisor. He's going to tell you this is how to do it, this is how to do it. I like me to, when you ask your questions, again, once I've been working with a license since 2007. So there are things we just don't do and say, right? But if you understand the concept, you can use it to your benefit within the legal frameworks that are available. Protect your loved ones with life insurance in case life is short. Create an inheritance the cheapest possible way. For my $1 million policy that will be passed to my children, my total contribution is $132,000. If I was going to give them a $1 million house, I will pay $1 million out of my pocket. Number 3, permanent term insurance is what most companies will give. If you leave the company, you can take your term most of the time, but the premiums will change at that point because the premium was calculated based on your group. If you leave that group, let's say you were working as a doctor and you got a 10 on that group, and then now you become a construction agent, you are climbing to the top of the tower. It's going to be calculated based on the new risk. And most times it's so bad that people just abandon the policy. Finally, there's nothing to lose when you save your money in an umbrella that will protect you today and tomorrow. Thank you.
Thank you so much, Dr. Oba. Is that okay? Obas. Okay. Yeah. Okay, that's the short one. So thank you so much, Dr. Obas. I think we've learned a lot. Thank you so much, Dr. Chiedu. It's been an amazing event. I don't know if we still have people that have questions. We've put
Abby.
Can you please put the code where they will scan again?
Okay, I'll do that right now.
On the chat, for everyone here, this is the Thrive community. It's a community that wants to ensure that every immigrant thrives. We are not particular about just being Africans. I started this community because of what I went through when I just came into Canada. I saw that there were a lot of information hidden, and there were a lot of people that give you half-baked information. Because of this, I was moved to say, can I have a platform? Because I believe I have a wealth of good friends, a lot of people that are well knowledgeably, let's say knowledgeably wealthy in different aspects, that could help us thrive as Canadians. Looking at my back in Nigeria, I have over 15 years of experience in corporate and investment banking. I understand what it is to thrive. I understand what it is to want to be great. And I understand the pain of starting afresh, even when you're great. So it's about everything from career, to family, to how do we keep our families together, to our mental health. We're going to have an event on mental health, to tax, to investment. And this is just a part of the investment, which is life insurance. There are other investments series that will be coming that will not be covering life insurance, that will be covering other things that you can invest in now. That is what Thrive is about. And because of this, you don't want to miss anything. I have put down on the comment section our Instagram page and our YouTube page. Please subscribe to our YouTube page and follow us on our IG. You can go and watch all the past series that we've had. Trust me, especially for the kids. If you have children, you want to know that, when I download Khan Academy, it is free. And your children are excited. Are they always glued to games and, watching cartoons? If you download the Khan Academy for them, easily your children would just transform overnight. And that is what I've seen. This is something I've done myself. Putting your children in Cadet Academy, how does it change their lives? If your children, you think they are stubborn or they are so soft, this is something that could change their lives. And you'll be surprised that your children will be pilots in no time. They'll give them the pilot license. Do you know that your children can start flying a plane as teenagers? These are the things we do in this community. We don't want to hide it. I don't want to have information and hide it for my family. I want to share it because the future of our kids lies in the foundation that we build now, in the community that we also build, that will be safe for them, that would help them to thrive. Today is about insurance. Today is about investment. Don't live without scanning, the barcode. It's important that we secure our future. We don't pray anybody dies, but life happens. So if it happens, why don't you have the insurance? And now you've also heard that this life insurance can pay you while you are alive. From 67, according to Dr. Chiedu, he said that you can start getting stipends monthly or yearly. You choose as you want. So don't think that, you will just be saving part of your money, then is for children, is for your wife, is for your husband. You should also love them. So there's no big deal in it being for them. But the good news is that from 67, you can have access to this amount. We've also heard that you can go and get a bulk of your life insurance money investment and use it as, to buy a property as a down payment. What other, that is so beautiful. That's so amazing. So why wouldn't you want to have an insurance? And I don't know, I'm not so sure. Does this give you a cashback in tax? That's one thing I did not even ask.
No, it doesn't.
Oh,
No.
okay, it doesn't. Okay, so that's fine.
But it's very important to say this. If you take your money, if you collateralize it, you pay no tax on it, right?
Okay.
But it's not tax deductible when you pay today.
Okay.
But
Okay.
if you are a corporate entity, for instance, okay, my corporation also pays another $2 million cover for me, and another $2 million whole life. All that is tax deductible to my corporation.
Okay. Okay.
So, but that's a whole new discussion. Let's not open it. Okay.
Okay.
Now, yeah.
I see a
Get some
question
raising
here.
hands.
Someone is saying that when your total contribution for a 1 million insurance is $132, please help me understand if this is all you pay monthly.
No, $132,000. $132,000.
But for a period of how long? So that this person
20
understands.
years. Of
40.
20 years. 20.
20 years.
Yes.
But it also depends. So for 1 million, for the person
For me.
asking, you should know that it depends. There's going to be a calculation. And apart from the
Exactly.
calculation, they will also be looking at how much can you easily afford, because nobody wants to go
Yes.
through a stretch, in doing that. I think the Gateway community understands that. So they will also
Yeah.
be saying, okay, what can you start with? I think you can always up your game when you are the more comfortable you are, the easier it is for you to up your game regarding, the investments you're doing, the contribution you're doing, and the total amount of insurance you want. So there's flexibility. And, there's also something that we heard while we're having the conversation, that you could take a break, and it doesn't change anything. A month break, 2 months period, you can take a break. If okay, at a particular period, you think you don't have enough funds to do this. So I think that's all.
There's a few other hands.
Okay, we'll go to that. Can you take the scan me off the page now?
Okay, please. Yeah, let's do that. Sorry.
Okay. So Kennedy, you can go ahead.
Yes, thank you so much. I just want to add, I think Dr. Bass already answered one of the questions. It varies from individuals with individuals. My wife started with a 129 monthly payment for a 500,000, and eventually she added a 1 million last month, 1.5. But that same 500, I was paying ×3 of what she was paying, based on my age, based on other factors that are associated with me. So it varies with individuals. Who put in the details and get what is tailored to you. All the discussions cannot be exhausted in platform like this. It's important that individuals have individualized discussions as relates to them. The other thing I want to add is that this is also an awesome aspect of career one can take. Dr. Bass briefly talked about it. You can combine it with any other job. Some of us were combining it with other things, and it's there are few persons that earn over 100,000, as you mentioned, and life insurance agents are one of them. You help people to save for future, to protect their families, and then you get good income for it. If you're
Mr.
interested
Kennedy,
in joining the
sorry,
yes.
Is it what you're saying now is that for people that want to actually register for the life insurance, they should also know that they can use it as a means of generating extra income for themselves?
No, what I'm saying is you can have your product separately, and you can also decide to have a license. One of the reasons of having my license was just to have the information, but later it became very, very beneficial. People can join the career.
Okay, so we can talk about this
Yeah.
later. I would like people to ask questions about the event. So sorry, we'll come back to you later, please. EII. Can you go ahead and speak?
L or Eli?
Can everyone hear me?
Yes, we can hear you now.
Good evening. Okay, thank you so much, Yamadi and Obaz. So I am pretty sure I heard $132 as contribution. So again, back to, I know Obaz briefly mentioned it, but I just wanted to clarify. So although he clarified that to say 132,000 is what he was referring to, but what it seemed like I heard is for a $1 million insurance that he has, all he makes pays as contribution is for the insurance is $132. Is that correct?
No, $132,000.
Okay, so you were not referring to the premium here.
I'm referring to the premium, actually.
Okay,
My
it doesn't
total
make sense to me.
premium.
Like,
So let
okay,
me say it again. My total premium that I need to pay, the total I need to pay for that policy over 20 years is $132,000.
Okay. Okay.
And
That makes
that's
sense
because
now.
of my gender and my age.
Okay. So
There are,
when you say, oh, you go ahead.
there are people who will pay half of that. There are people who will pay
Mhm.
2 times that, depending on all these factors Kennedy mentioned.
Thank you. And
Yeah.
when you say for the 132,000 for the 20 years, are you talking
Mhm.
about just the insurance component? Because again, this is from, I don't have a universal life policy, but I have
Mhm.
heard from friends. And one of the
Mhm.
things I have struggled with is for everyone who has this policy, when I ask them questions, it's hard for them to clearly articulate what they have and explain it to me. So
Okay.
that's why it's good to have someone like you. So when you say 132,000 in the 20 years of having that policy, are you talking about
Mhm.
the premium, insurance premium? Because I understand every monthly payment they make, there's a part going to insurance, there's another part going to
Mhm.
investment part. So this
Mhm.
132,000, is that both the investment
It's for
components?
both of them, everything together. So when you pay the premiums monthly, every
Mhm.
month, the portion going to the investment goes every month. The part that goes to pay for the insurance goes every month.
Thank you. And then
Yeah.
to the cash value.
Mhm.
So I think you kind of answered my question just shortly after I put it in the chat, but I need to be sure. So I was asking, when exactly does the cash value begin to accrue? Like I sign up for a policy, I know the cash value would not be accruing immediately.
Yeah.
So when is there like a fixed time when I would say, okay, from this 5 year or 3 years, this is when it begins to accrue. And then if it does, what where does it come from? Is it from my investments, returns? Where exactly is that coming from?
Okay. So let's do that. Now, when you pay your premiums monthly, you already know now part of it goes into the investments, right? And
Yes.
this is compounded over years. Now, you do
Mm-hmm.
have funds in the policy, but it is called fund value at that time. Those in the banking in Nigeria, I remember that we see available balance, ledger
Mm-hmm.
balance. There's a
Yep.
part of the money, it's your money, but you can't access it, right? In the first
Yes.
5 years, typically, all you have is the fund value. And the reason is because if you cancel that policy in the first 5 years, it's not
Mm-hmm.
beneficial to the industry. So it's just a deterrent for you not to take out money from it or cancel that policy. Okay. After the 5th year,
Okay.
from the 6th year, you start to see some of that fund value being released as cash. By the 10th year, your fund value is 100% your cash value. Now, this is a typical scenario. We can alter
Mm-hmm.
all of that because of the flexibility of a UL. For
Okay.
instance, if you have not been paying your premiums based on this typical scenario, you probably have your
Mm-hmm.
cash value coming in later than typically planned, right?
Yep.
If you have decided to double pay so that you don't want to pay for 20 years, you want to pay this all off in 10 years, you probably start
Mm-hmm.
having your cash value coming in earlier than originally planned. You can do all that manipulations.
Perfect. Awesome. So what you're saying, if I understand correctly, is based on, again, personal finance is personal, right? But based on
Mhm.
individual circumstance, you can decide, okay, you want your cash value, how you want your cash value to trickle in, or maybe just have everything rolled over from some point in time in the policy. And also what I hear is the cash value ultimately is your investment and the returns. So let's say for what you said now, that in 10 years, for instance, you can have your entire your entire fund value as your cash value. So which
Yes.
means my investment components, if it's $200 that's going in every month, and
Mhm.
at the end of 10 years, I would have that total plus the
The return.
interest or the returns I have earned on that money.
Mhm. Mhm. Correct.
Okay, awesome. I know this is not a class for me because I still have other questions. I'm kind of, okay,
You
so
just
what I
scan the
currently
QR
do
code.
is,
You scan the QR code.
I'm joining on my phone, so there's just no way I'll scan the code
So
again.
Okay.
Wow.
So I already said it
Final?
earlier. Can you hear me, please? Because of
Yes, I heard
time.
you. It's on the
Yeah,
YouTube.
because of
Okay, thank
time.
you.
Can you
Sure.
click on the YouTube page there? We are going to be posting this entire series there. The barcode will be there. You'll be able to easily scan it and get through to the team and ask every other question that you need. And this is for everybody. Go to the chat. You will see the YouTube channel and the IG channel for Thrive. You know, there's time constraints, and we want to quickly take other people, and so that we can wrap this up in like 5 minutes. Abby, you have the floor.
Oh, okay, thank you. I think while you were even answering, you answered some of my questions because I was going to be
Okay.
asking questions about this cash value. But when you said
Okay.
at the end of, let me just jump to that before I ask another question. Sorry, I'll be fast. When you talked about having the entire amount available as cash value over a period of time, at the beginning, this same amount, that's the premium that's being paid, is split into cash or is split into investment and insurance. So you said the total amount plus what the insurance will be now becomes the entire cash value that is accessible after a period of time. That's what you said, correct?
No, I'm not sure I understand that question.
Okay, you know what? I won't drill into that because it's going to take some time. Let me just jump into
Okay.
another one now. When you started the presentation, you said something, and I'm asking this from a personal point of view because in the last 1 week, I told myself that I was going to self-train on trading on stocks and all that because this is something I wanted to start doing. But when you started talking about this, you talked about how this insurance thing check a number of boxes. So in your
Yeah.
opinion, without going into so much details, because it says something about part of the money is invested even in stocks, talk about S&P 500 and all that. So would you say that buying this life insurance and compared to me trading, because if I know I'm trading, I'm taking all the risk, right? Which is why I wanted to start. Would you say just, this is a novice asking, that it makes more sense to buy life insurance than for me trying to trade and taking all the risk?
Yeah. If you don't already have life insurance, that's just a no-brainer. That's where you should start from. When you do the life insurance, you share the risk, right? Plus, when you get benefits from your life insurance, it's tax sheltered. Now, if you put your money in stocks, it's non-registered investments. We tax you on the growth of that money. You sell the stocks, we tax you. You make profit, we tax you. Whatever you do, you're taxed throughout on NRIs. So that's where you end. So you've grown your portfolio so much, you end it there. You don't want to start from there. Yeah.
Makes sense. Now, when you talked about you paying premium over, let's say, 20 years, is this amount going to be graduating? Is it like a fixed amount that is maybe if you do an assessment of someone, like I want to take life insurance and I'm supposed to pay in X amount, is this going to be changing as I age, or is it going to be a
No.
flat amount over the period? Yeah.
So we factor in all the changes of your age throughout the period and give you a fixed amount that you should pay, that you should pay for the policy to give you XYZ benefits. You now ask me, Obaz, I want to make double that benefit. I'm like, okay, for that same policy, pay this extra. So pay it off earlier, and then you get more. Can manipulate. But it's fixed, pretty much fixed.
All right. Thank you.
You're welcome. Yamade?
Yes,
Floor
I'm
is
here.
yours.
Sorry, I was trying to unmute. So
Okay.
there's a final question from, sorry, EII, what's your name? I don't want to be calling you. Should I just call you E? From E, our final question is that why should I do universal life over a BTID, which I currently do and believe in? It's okay if you can't answer, but everyone I've asked this haven't been able to tell me why.
What's a BTID?
What's a BTID, E?
I don't know.
E, are you there?
So I am. I mean, you already said there was no time. So I'm just going to say there's really no need to answer because, like I said, I've asked a number of people. So by the way, BTID is I buy term insurance and I invest the difference.
Oh, I can tell you
So
why.
that's
I
what I
can
do.
answer the question. I
If you
love that
answer the
question.
question, trust me, I have counter questions and all that. So I just
Okay.
really I feel like it's a personal one-on-one. Because everyone I've asked so far, they haven't really been able to tell me why I need to do that instead
First
of a
thing is
term.
this, First thing is that nobody invested the difference. You won't invest the difference either. Okay, you are busy enough with the problems of the country.
But I
If you're
do.
an investor,
Like I
you won't
do,
even be
I invest
discussing
every
this with
month.
us. Huh?
I invest every month. I have
Okay,
VFD in Vanguard,
now
in S&P and all that.
fantastic. So let's take you back to the non-registered
Dr.
investments.
Obaz, we're not going to take this now, trust me. Like we said, you're going to get through to them so that you guys can banter, because this is like a
I'm
serious
looking forward to
banter.
meeting you.
Yes. Yeah. So Adekemi, do you have a question? Because I see that you've been unmuting for a while. I didn't see your hands raised up, but you've been unmuting. Do you have a question, Adekemi Famuyiwa? Kemi, are
No,
you there?
no question. I think I omitted in error.
Oh, okay.
Okay.
Thank you.
Thanks.
Thank you. All right. So like I said, I'm going to be sending the QR code for us to scan, both to the Thrive community. It will be on our IG, and it will also be on the YouTube page. So please, everyone, if you can, please go to the YouTube, to the chat, and follow us on IG. For YouTube, please subscribe to our channel. And you can also share with a friend to share with a friend, because everything you need to know about being an immigrant will be uploaded there. We just started, it's new, it's just like a week old, but we are going to be filling it up with past events and future events. Thank you everyone for joining. Thank you everyone for coming.
Thank you so much.
Please help me take down the the slide.
Okay.
Yes. So on the final note, thank you for joining the Thrive community today. Thank you so much. Dr. Chedu, can you come on the call too? Can you come on video?
Yep. I want to appreciate you for this great opportunity to discuss finances with our fellow immigrants. Special thanks to our guest today, Dr. Bass. Of course, you've been doing well, so I'm not too surprised about what happened today. And I want to say a special thank you to as many that had the time to join us. And most importantly, knowledge is never ending. That is why we had to go as far as getting that scan. You can always scan and reach us for questions, for clarification, for policy statements, and anything you can just ask us. We are there 24 hours. Though we are doctors, but we are financially inclined. No issues at all. Thank you so much.
Surgeons, financial
Thank you.
advisors. It's so nice to have you in the Thrive community. I'm sure one of these days we might have you again. Thank you everyone that joined. We are always having events on a monthly basis. Different events are coming up. Next month would be amazing. We're having an amazing personality all the way from Toronto. She's coming with fire. There are actually two people coming with fire. Thriving Not Surviving Canada 10.0. It's been a nice time. It's been a beautiful evening having everyone here. Please do your life insurance and have a good evening. Bye.